particular areas, you can see how your policy lines up, and if you have any specific questions as it relates to your particular policy, I'm hoping we cover it in the discussion, because I don't want to get into the personal information XYZ, but in a general environment, if there are concerns and questions, then I can answer them and deal with them at that particular point. I've been in the insurance industry come June 40 years, and so I've seen the good, the bad, and the ugly, and I've seen some of the cases that are usual and the usual misunderstanding from the consumer perspective, and I've also seen and why those misunderstandings happen, and generally it's because the agents who is actually submitting the application and walking you through, they don't tell you every little fine point of the contract itself. But so I will go over the usual complaints that we've gotten in the insurance industry and some of the reasons why insurance companies interpret the way that we do. So you get a better understanding as to when claims are denied, for instance, why they might be. And invariably, it's because of one of these principles. There has been a breach of one of those principles. And what we say in the insurance industry is, if there has been a breach at the application stage of the policy, it makes the whole contract null and void. And so you could not have committed fraud or have not given us information as it relates to that particular policy and the setting up of that policy, and then take benefit of a condition in the policy. Because if the contract is null and void, then all the conditions in the policy is null and void. And in those environments, the insurance company will return the premiums, but not necessarily what was expected to be paid for in that environment. I find that from a personal perspective, the major issues are motor policies. And one of the things that I've seen is people allowing other persons to drive their vehicle and they're not covered. And people thinking, I have comprehensive, which means everything is insured. We will discuss the basic exclusions and the policies, because the majority of them have the same basic exclusions. So not everything is ever covered. Okay, so are there any questions before I go on? Okay. What I'm handing out now, I kind of pulled right down from the Insurance Commission. One, two, got enough? Okay. Because I had asked last week that persons can go to the Insurance Commission website and pull down information, and as a result of this information, we might have specific questions. So again, the information is readily available, but you just have to know how to find it. So we're going to be discussing that today. As it relates to I'm on page 5, the introduction itself, it actually lays out, and some of the things that we're going to do too is go to the glossary, because in the glossary we have legal definitions of some of the words and phrases that we would use, and so we will cover that during our whole discourse, and it tells you how the booklet is actually divided. The other thing is, when you hear things like long-term insurance, that's life insurance for the main part, because it is expected that the policy would be enforced for more than a year. Okay? All of the general insurance policies are on an annual basis, and they have to be renewed on an annual basis. And one of the things that a lot of the consumers don't recognize is at every renewal of the policy, if there's been any material change to that what is being covered, they have the utmost good faith to let the insurance company know. For example, if I took out a motor insurance policy where when I first took it out, the persons likely to drive was my husband and I only, because my kid was only about 14, and now this son or daughter is now 17, 18, and they had given me a condition under my policy to say that it should be driven by only persons 25 years and older who would have been driving for 2 years or more. If I'm now teaching my child or daughter to ride in this vehicle, and this person has become of age and they are likely to drive this vehicle, I should go back to the insurance company and advise them at renewal that there's a chance that this 18-year-old might be driving the vehicle, or the 20-year-old, because anyone under 25 would not be covered under the policy. And when they assessed the risk at the beginning, there was no likelihood that there was anyone of that age who might drive the vehicle. We don't do it because we say, it's going to cost me some more money. But if you fail to disclose that, then there could be where that accident happens and we're saying we're denying liability in any event. So I've seen that happen sometimes when people do not disclose new stuff. We also go into a homeowner's policy where we ask you if it's a private dwelling used for domestic purposes only for you and your family. And you said yes, and you insure the home. And then at some later date and time, you actually go to the place where you add on an efficiency. That changes the dynamics of that policy. It's no longer for private and domestic purposes. It's actually a commercial adventure attached. And you should be advising the insurance company at that point. Some companies might say, well, once it's still privately occupied, we won't increase the insurance rates. Some might say, well, that changes the whole thing all over again. But it's your duty to actually disclose anything material that might affect the risk. And that's at the application stage and at every renewal. That's a requirement, because utmost good faith is for the whole duration of having the insurance. And what the insurance company sees is at every renewal, that last contract has expired. In order for you to renew it, you have to give me more information again. But we just get a renewal notice, send the premium in and whatever. The other thing we discussed last week is that the burden is on the insured to make sure that their home is adequately insured. Otherwise, they could be penalized for coverage in that environment. And what they have and what the insurance company should be advising you of is something we call the condition of average. So if your home is more than 85% underinsured, they assume that you are taking responsibility for some of the coverage yourself. And so if it's 50% underinsured and a loss happens, they are expecting that you be responsible for 50% of the loss. Because the whole property is only half insured. So if there's a loss, only half of the loss will be paid. And that's a difficult thing that happens a lot, that the people in the community are concerned about, and I see it quite often. Okay, I don't think there's anything there that we couldn't go through. I mean, you couldn't read yourself. And so what I've given you is the Domestic Insurance Act. And it comes straight from the website, and it covers just basically everything that is there, because it gives you what is the role of the Insurance Commission of the Bahamas. And it says something like this: to protect the interests of the insuring public through the prudential supervision of the insurance industry operating in the Bahamas. The Insurance Commission was established in 2009, July 2nd to be exact, under the Insurance Act of 2005. And of course, there are regulations that go along with that act. And it's responsible for the regulation and control of all insurers and intermediaries. So it is in addition to the persons who want to do business here, which we call domestic insurance, and persons who want to do business covering persons outside of the country, but they are the company itself is domiciled here, so it'll be an external insurer. So all insurance companies, no matter what they do, have to have registration with the Insurance Commission. All participants of insurance, be it the insurance company, be it adjusters, be it the agents and brokers, captives insurance, they all need to be registered and licensed by the Insurance Commission of the Bahamas. Its role as both the prudential and market conduct regulator is to ensure a sound and stable insurance marketplace and consumer confidence in the insurance industry. So the Insurance Commission is actually saying we are the big brothers for the industry, and we need to, as a matter of fact, their role is dual, because they're protecting the public and they're protecting the industry. why they would want to protect the industry is all insurers will pay the insurance commission 3% premium tax on all of their premiums, and that's gross premiums. So it isn't a matter of you can take away all your expenses or whatever have you. So they want to make sure they have a viable industry to continue paying the taxes, but at the same time that we regulate and we don't have situations where a company could come in, swoop down, do one bunch of stuff, and then they end up leaving. And in our country, it's good to have local insurers, but it's also good to have external insurers. Because if you're looking at reinsurance and where the insurance company takes out insurance, they're looking at how far reaching the effect is. And in small island states, for instance, in the Caribbean, when you're dealing with an international insurer, for instance, you are case number 000056. When you're dealing locally with all local employers and whatever have you, you are Jane and Susan and whatever else. And so I know the cousin, auntie, uncle of, because that's the small community. So if you get an application with information, even though we say that this should be private and confidential and only for the purposes of insurance, an insurance company, invariably an application passed through their hand. Oh, I know, he goes to my church, and so on and so forth. And they don't tell somebody meaningfully on the outside, but talking to the husband, or you know what, so and so, or he came in, or you just see a person coming, what are you going for? So you get the benefit of confidentiality when you're dealing with an outside entity, but at the same time you want to make sure that those entities understand the way we do business here, because that is sometimes the biggest challenge that we have. And where we know where dog flea alley is, our AML requirements are such that if somebody don't have anything saying dog flea alley, they say have something that says Dowswell Street, and the reality is they threw the corner off Dowswell Street. It could be an issue, and some regulators go to the point where they say you have to prove not only that we know exactly where you live as an AML requirement, but for me, I know exactly where that street is. It might be also true that some streets don't have names. So when that person starts to set an application and they say, I live Pinewood Gardens, and you pressure them to say, which part of Pinewood Gardens, what's the name of the street? Well, the street don't have any name. It could be an issue. And so what I do to get around that, sometimes I say, where do you live? Okay, there's a utility attached to that property, wherever that is. They're either getting light bill or water bill. Even if it's not in your name, you can get that person to produce that billing, and on that or attached to it to say, yes, Sharon lives at this address and XYZ, and that works for us. So we get around it that way. Also, to whatever you gave the bank to open the account, we're saying if you could get a bank statement, we'll go with that. And so there's ways to get around it, but some jurisdiction hold so fast and hard to the AML requirements, and really the AML requirements was not intended to be for every contract. You know, it's just those ones that are at a certain level and above XYZ. And so companies would take a real strong line of all the stuff that is in the guidelines that is out there. Sometimes could be doing themselves a disservice because they really can't produce that information. So in addition to consumer companies and the insurance industry, there is a complaints process. So if you as an individual have a complaint against an insurance company, the insurance commission has a process that you can go through. And it's a one-sheeter, and they actually list all the things that you need to put in that document in order for them to consider it. And once you've done that, you file the complaint, and on the company, the agent or the broker, you obtain a written response from the insurance company on the letterhead referencing the complaint. So before you go to the insurance commission, they would expect that you get an official statement from the insurance company. You put in a claim, they've denied your claim, you have the right to ask why. And they just can't verbally tell you, they have to put it in writing for you, because this is a part of the complaint process that you have this document in writing as a response. And then you submit the claim form along with a copy of all the attachments. And they say, please don't send the original documents, which is the backside of what banks are now saying. We want to see the original documents, and then we copy it ourselves, and then you can take it back. But they want to make sure that should you have to go to court, you still have the original documents that you might go to it. And then you submit that information to the commission. Step 4, the commission will review your written complaint. By your filling out and signing the complaint form, you are confirming that the commission has your authorization to contact the insurance company or intermediary and request copies of any documentation in relation to your complaint. And you are also confirming that the commission may contact other persons or organizations to disclose whatever information is required to assist with the investigation of your complaint. Your signature on the complaint form means that you certify that the information is true and correct. So what they're saying is, don't make a fool out of me. Make sure you got all your facts together and you got all the documentation to say that. And then you, by signing this complaint form, you're giving me the right as the commission or members of the commission to make any inquiries to help to understand what such scenario is. And so it could go both ways. It could be where the company was legitimately able to deny that claim. Once they've made their decision, the commission should send you something in writing and send that person, the claimant in writing, the company in writing, so everybody understands the end result. Some persons actually do say, I'm not satisfied with it, I want to go to court. They can still do that. They can still do so. But I can tell you have a lot of cases where the commission has actually made a judgment. I don't think they make it likely, so they would have gone through some basic principles and whatever have you. And I have every confidence that they would want to be fair to all parties concerned. But again, the person still has the right, if they want to go to a legal situation. The mandate of the commission includes administration of the act, both domestic and external, to keep insurance market surveillance. Now, when you hear people talk about what happened at CLECO, that happened at a time when we did not have a commission. Okay? We actually had only a registrar of insurance companies. And in that role, the registrar of insurance company was only to register who is here. And he did not have, that office, the office of the registrar of insurance companies, did not have the teeth that this commission now has. And that's why, as a result of all those issues, they said we need an independent body who would not only register everybody, but actually oversee everybody. And part of that overseeing is what we're going to be talking about in a short while. So the chances of another CLECO is very slim, because there's so much stuff that's coming out now, and the commission is always in tune with what the Attorney General's office is doing. And so all the guidelines and the things that come down the pipeline, if government decides that's what we're going to do, they will send that information out to the insurance companies, and they will supervise. And they have been closing down companies who can't say or can't show that they have the financial wherewithal to manage the claims. And we have to do a quarterly reporting. So you won't go down the road 10 years down the road and you're just finding out they don't have everything in place. You have to submit a quarterly report to the Insurance Commission, and it's going to be based on your solvency margins. You're going to be based on your actuary evaluation for life companies. We're going to be based on where are you investing these monies and how much you can legitimately take out of the country and all the rest of it. Those things are in place now.
How do they audit?
Pardon?
How do they audit these reports to say that
well,
these are actual facts?
You have to have independent auditors' statement attached to the information that you're sending. And at the end of the year, your financials got to support what you've been saying on a quarterly basis. So if by some miracle some company get away with it, they will not get away with it for longer than a year. Because at the end of that year, we would expect that a PwC, PricewaterhouseCoopers, KPMG is overseeing and looking at your books and then making some suggestions. Also too, at that point, before the registrar situation, there was a single person in there with, I would say, office administrators for the most part. Today, we have lawyers and accountants in the commission itself. who is responsible for oversight of agencies as well as insurance companies. So they know how to look at the financials and see that something is wrong. They can, if they don't understand what they're saying, they have the right to contact an actuary internationally. And there's also an association of international regulators, which every superintendent or commissioner is a member of that. So they could get on the phone and call Bermuda, they could get on the phone and call Jamaica, they could get on the phone and call Barbados. How are you guys handling these situations and whatever have you? And if a company wants to come here and do business, they need to bring a letter, a statement of good standing from their home regulators. And so once they submit that, the insurance commission here has the right to get on the phone and speak to them and say, well, okay, this company is thinking, are these people fit and proper and whatever else, are the bankings and all straight, do you have XYZ? And then they could give them a license. Before, they might have done some due diligence, I'm not saying they didn't, but they could not take the disciplinary action that the commission can now take. And that's what we're going to be talking about. They're also supposed to promote and encourage the sound, prudent insurance management. And so you couldn't say, oh, this insurance company is owned by John, and just because John's son now, John is getting old and he wants to put his son in place, and he is the general manager. No. He has to show that he's fit and proper and that he would have done the insurance studies to be competent at that level. Or the insurance commission could not sign off on it. If you're thinking about bringing a new product to the country, the insurance commission has to sign off on that product portfolio. They also need to sign off on who is representing the insurance company, not only the agents themselves, but the agencies. And so if this, because we used to have, prior to all of this coming into being, we used to have where one agent would do something here and then go to another company and do the same thing there and then go to another company and do the same thing there. The agent, when you leave an organization, your license has expired. And in order for you to get a renewal or get it updated, you have to have the sponsoring company to say, I'm prepared to sponsor this person. Having prepared to sponsor that person, they must say in that letter of a sponsorship that where they left, they made contact, and here's a document saying there were no stuff that there, and they don't have any issues with whether or not. And one of the questions on the form, incidentally, is, would you hire this person again? If they say no, then that's the question. But if he's so good, why not? And then because you have some people who say, man, I don't feel like not people cutting them out of getting a job and whatever else, and they don't go to the limit to say this is what happened. But it's mandatory and it's part of the regulations that you do a finaling report. And even if they owe this company money, they should have situations where there's an agreement of how it's going to be repaid. So you're coming to me, you're going to be an agent working with me, and you owe the last company that you left. I take the responsibility of saying, I'm going to pay that guy through your commissions or whatever, because if I think you're that good, I'm supposed to be settling my debts, your debts, with that other organization. Because chances are you're going to do the same thing to me. Okay? As an agency manager, I had a problem with people jumping from company to company to company. And one of the things that I used to be able to get away with is to say, well, you're coming from XYZ. What do you think I'm going to ask you to do differently that they didn't ask you to do? And if you weren't doing a good job over there, chances are you're not going to do a good job with me. And just like in any other organization, if the person comes to your organization running down your last supervisor, chances are they're going to run you down too. So you have to be leaving for another reason that I don't like the management and they do them people another. Because pretty soon, you're going to be them people that they're talking about. And so I always took that mindset that past behavior is a good indication of future behavior. And so, you know, I've turned people away to say, you know, I really don't think we're ready to take you on, or we're not in the marketplace. Whatever the excuse you use, you know in your gut that if they're being and now they're here to present to you, it's only a phone call away for you to find out what actually the situation is. And sometimes I don't even go to that extent, because all insurance companies ask agents to do the same thing. Solicit business on their behalf. And if you are half as good as you think you might have been, or I want you to be, you would still be at that company, because no one fires a good salesperson. No one does. So that's part and parcel of the problem. Advice to the Minister of Finance on insurance matters. Anything related to insurance, the Insurance Commission has to be involved in. When we discuss in the national health insurance, they had to be involved with having a discussion at that point. They have to be invited to the table, because anything that will affect the insurance industry on a holistic perspective actually comes under the purview of the Insurance Commission. Compliance and the Compliance and Securities Commission work hand in hand with the Insurance Commission, because there are some products and services that have investments attached, and so they actually keep in line with that, and any Financial Transaction Reporting Act and any anti-money laundering legislation. All of that comes part and parcel with the compliance. In terms of their mission statement, it goes into protect the interests of the insuring public. Again, they be supervisory and regulatory authority for the industry. They ensure the protection of policyholders' interests. They ensure the insolvencies of insurers and their reinsurers. Because sometimes companies say, well, I don't need to have all the cash because I have a very solid reinsurance program in place. Internationally, you'll have about 3 to 5 major reinsurers. So I've had the pleasure of someone coming to me to take out some life insurance, and asking them questions on that clean application, and I submitted the application, and my reinsurers got back to me and said they're declining, and the customer said, well, what you mean they're declining? You know, I don't have any of it, whatever else. And when I questioned it, the reinsurer said, we're declining for the same reason that Family Guardian declined. Because no matter what you do, when you get at a certain level, it's only about 3 to 5 reinsurers that work in the Caribbean region. So if you're over a certain limit, you're right back to the same reinsurers. And so I always say it is your duty to be absolutely truthful on the application, because over 100,000, I'm needing to go to the reinsurers, and it's the same reinsurers for most of the companies that operate here. Facilitate the orderly functioning of reinsurers, insurers, and intermediaries. That word intermediary is anybody that's between the insurance company and the insuring public. So it could be an agent, it can be an agency, it can be a broker, and we're going to have that conversation. So intermediary, that word, I actually think equate that to the person in the middle between the insurer and the insurance companies, and it could be different types of intermediaries. For the Insurance Commission perspective, when they discuss agents, we think of an agent as an individual person on the street doing business. But for the purpose of the Insurance Commissions, that's a salesperson. And an agent is like your J.S. Johnson or Insurance Management or whoever else. So there's some words that can be misconstrued in our local environment compared to what the Commission is saying. When they talk about an agent, they mean a corporate body. When they talk about an individual person, they call them salesperson. So you would have a salesperson's license. And a salesperson can only represent one entity. An agency could represent several insurers. So you could have this company limited agents and brokers, and I represent Family Guardian, Kalina, and BAF, or I represent Bahamas First and Security in General. Because you can, as an agency, an agent mode, because that's what we're talking about. And we will break down the difference in that environment. The mandate of the Commission includes administration, promotion, advice to the minister. Again, that comes in. And the purpose, definitely. If you wanted to, or what you could expect to be on the exam is what's on page 2 in terms of the functions. And not necessarily you'll be able to say, read it off verbatim, but that you get an idea of, and however you put it in your format, is what it is, what is the true function of the Commission. Maintain surveillance over the insurance industry, promote and encourage sound, prudent insurance management and business practices, to advise the ministers responsible for insurance matters regarding the insurance market, to ensure the provision of the Financial Transactions Reporting Act and other anti-money legislation, they are being complied with, and to do such other things as may be prescribed by the Act or any other written law. So they are actually the gatekeepers, the protectors of everything related to insurance. And they have the power to impose any condition, limitation, or restriction on companies or intermediaries, or their operation or their investments. So if you're planning on investing in as a matter of fact, when they do the review, they look at your investment portfolio. If 90% of your investments is in real estate, and we know it's a tough real estate marketplace, they might ask you to diversify. That's for the protection of the company and the policyholders. So that's how deep they get, and they can get, and the actual act gives them the power to do that. Amend or revoke any registration. We could say, well, this particular entity's been having a lot of problems, and so either we move the managing director or whoever else, or we actually revoke the license of that agency. And if there's been sufficient complaints and they follow it through and they've seen that it's legitimate, they can actually take the license away completely, or they could say suspend the license. So until you get your act together, until you put more capital in or whatever have you, they have that right to be able to do that. And any authorization, permission, condition, restriction, or limitations, they have the power to do. They require that companies and intermediaries or their directors, officers, and employees, shareholders or policyholders, will take or refrain from taking any action the commission deems necessary. So also too, we want to know who owns the company. They want to know who owns the company, who are not only the officers of the company, but the shareholders of the company. And if there's any person of what's the word they use? Because they deem that they need to be deemed fit and proper. But if there's any questionable characters involved, they could say, well, you need to change the composition. Or if we find that some companies have principles in common, where the agency has this man involved, and also too, he is on the board of the insurer that they're selling for, they might want to say, well, I want to make sure that his holdings only at a certain percentage level or whatever have you. And there be a clear distinction between the two entities so that there be no conflicts of interest. Because all of that is what the commission will be looking for and looking at. They must require the filing of any document or information, determine the form and content of any document, and that includes banking information and central bank information. If you have any non-Bahamian residents attached to your business, they want to know who they are and which jurisdiction they're coming from, and they can check with that regulatory body who governs that person, and they do things like background checks and whatever, which could extend beyond just the Bahamas. They do a world check to make sure that there's no information that can make them undesirable. They could require an appraisal of any real property of any company, any assets on your books that they think is overstated. They could ask questions. They could see information in terms of the licenses and the papers related to that. Because they need to sometimes companies, and not only insurance company, when you look at financial scandals internationally, a lot of it came from the overstatement of assets and stuff, just to make it look good on paper, when in reality the company was in trouble. And so they do have accountants involved in the commission at this point. And sometimes for people who are in the industry, like, why do we have to go through all of this? But it's usually because it has happened in the past, and you want to make sure that it doesn't happen again. Because you want to protect the integrity of the business as well as the people who are being covered in that environment. Because if the company is not there to deliver the services that you bought, which is expected to be a long-term service, then the whole bottom falls out and the industry gets a bad name, and it makes it that much more difficult to do business. So they could require appraisals done of real property, and the cost of whatever they ask for is borne by the company itself. So in other words, get your act together, do it right, and then we don't have to have this conversation, because anything we request, you will have to go and pay for. And they also have what they want to make sure there's some segregation of funds. So if you were carrying pension plans, for instance, you're not mingling the pension monies with your company finances and the basic expenses of running the business. Or you say, well, I got a lot of young people working with me, so I could use this money, and then by the time they're ready, I will have a, no, you can't do that. And so they have very specific rules and regulations as to what can happen. Because we've had companies prior to this commission coming on, who said, well, this pension portfolio for my employees is X, but we need some new vehicles, we need some new stuff. I can take that money, use it, and pay it back. They can't touch it. It has to be segregated now in this under the new commission. And also too, they specify any class of insurance that you want to cover. So if we got a license and we have what they call long-term insurance license, and we suddenly say, I want to sell motor insurance, they could decide, well, you need a separate entity in order to do that. And even though you might have principles in common, you can't have it coming through one door. Like, there should be a clear distinction between property and casualty and life and health. And so what you find happening is the life and health insurers would have an agency responsible for property and casualty business. So that's a separate entity all at the same time. They treat insurance business of a specified class. We don't usually cover the crazy stuff, but we have a group of association of insurers called Lloyd's of London, who are known to insure people's legs, people's eyes. People like your Venus and LeBron and those kinds of individuals, and their ability to make money is what they are insuring. And if their assets is their abilities and some natural thing that they might have, Betty Davis eyes, Tina Turner legs, that kind of thing, because that brings anything that earns money is something that is able to be insured by them. But they don't take it from a risk perspective. They take it from, if it happens, how much do you want to pay? And it could be, I want to insure for $10 million or $12 million or whatever have you. They then go throughout the different syndicates and says, well, we want to cover $1 million, you could cover $2 million. So you have an association of underwriters as opposed to an insurance company, because you really can't put a value on someone's legs, arms, or whatever have you. Okay, so they just agree. They usually issue an agreed value policy, and they share that throughout the different syndicates at Lloyd's. So Lloyd's is just like a marketplace of insurance associations that is recognized by the regulatory body, not an insurance company per se. And a lot of the big entities that we think of as insurers, they are really agents and brokers for international companies. So people always say, I'm insured with Insurance Management, or I'm insured with J.S. Johnson. They're never insured with them. They are insured through them by X, Y, or Z. And back in the day when I was at J.S. Johnson, it used to be like the Eagle Star or Home Insurance or General Accident or Lloyd's. So when you got your policy documentation, you might see the agents and brokers of J.S. Johnson, but the company is up here. It's something else. And that's a different mindset that people have to come to grips with. They can actually exempt any person or class of insurance, any person or class of person or any part of any class of person business from the provision of this act and a regulation subject to such terms and conditions as made the Commission's opinion. In the Commission's opinion, the superintendent of insurance is an automatic member of the Commission, but the other board members are appointed by government. Okay, and you want to make sure that the superintendent is a CPA, so that again, you want to make sure they understand and can read the financials and those things related to those financials. And they can make rules and issue directives providing for such matters as may be deemed necessary or expedient for the carrying on of the responsibility. What I have found is the larger the entity, the more due diligence they do. The smaller the entity, you're just starting up, you got a small portfolio, you still have to do a certain amount of things, but they don't go to all the asset tests that they do, because if a small community is affected, you can do a certain amount of due diligence. But when there's a large group of persons covered, because the portfolio is so big, then they want to make sure everybody along the line. And not only that, you have management in place to cover that business, you actually have some succession plan in place. So what happens if, and you have some companies where the top 6 persons are in retirement age in the next 2 to 3 years. The commission would want to know, what plans do you have in place? Okay, and if all of them close to 65, 70 or wherever the probability of death, how does it affect XYZ? And if you have also, in terms of pension portfolio, for instance, if you have all of your people closer to retirement age, is the portfolio, is the fund large enough to cover all of them within a couple of years? And what are you doing to introduce new young members to your employment so that they won't need pension for another 20 years, but they are contributing to make sure the fund is properly managed? And that depends on whether or not you have a defined contribution mindset or if you have a defined benefit. The difference being, if you have a defined contribution, it says 5% of my salary is going to go into this fund. That's it. When you're ready to leave or you die, the only thing you get is what you put in plus any employer's contribution plus any interest earned. That's the easy one. But you have some companies that says we're going to pay our people 2 times their annual salary when they retire, or some benefit that they get because of retiring. If you look at the portfolio and more than 50% of your people is going to be retiring in the next 5 years, you could have a situation where the fund is not adequately covering that, and so they got to bring in a lot of young people, or they got to ask for more money to be put into the fund. And all of that, the commission will make sure that they are on top of, so they can decide on how you, because they're protecting all the employees and the public and the insurance company all at the same time. So they have their hands full. So basically, that's the information coming directly off the commission. From that, do we have any questions? Because on page 8 through 12, it kind of goes right back into that kind of thing, because it actually tells you what comes in the part 1, part 2. I'm not so much concerned as to whether it's on the part 1 or whether part 2, as opposed to what is actually being covered. I'm getting it. You guys are kind of cold. No? You okay? Okay. Yeah. So it goes right back into on page 8, supervision, compliance, maintaining of surveillance, promoting. We discussed all of that already, and so that is not an issue. Supervision relationship, you can read that. The other thing that I think is interesting, that's on page 10, it talks about corporate governance. And they are very, very high on corporate governance, the appointment of auditors and actuaries, and the establishment of committees in organizations as well. They want to know who these people are. They want to know that they have the expertise and experience in order to manage appropriately. And also, when it comes to transfers of mergers and acquisition, yes, the company that is wanting to be sold is wanting to give it to another individual. What the insurance company, what the insurance commission wants to make sure is that receiving party can manage the portfolio appropriately. So all those mergers and acquisitions you've heard over the industry over the years, they not only do a due diligence on the party that's being sold and the portfolio that's being sold, but they also do the due diligence on the party that's receiving and the persons who are managing those areas. So on page 10, it talks about transfers, acquisition, and amalgamation of companies. All of that comes under the purview of the insurance commission. Corporate governance is the appointment of corporate governance is in the company itself and externally. Do you have the systems and procedures in order to do what you're doing? In terms of the AML requirement, it's a requirement that a insurance commission, ICB we call them, the ICB appoints an auditor, independent of your auditors, to come in and inspect your books and make a report to them as to what is happening in the organization. And that must be done on an annual basis, paid for by you, the insurance company. So in addition to their oversight and whatever have you, they actually have independent auditors come in, and they could demand independent auditors come in, and it's at least once a year, but if they have concerns about the entity, they can make sure that it's more than a year. Like every 6 months, I want to see what's going on. And you have to open your books and your entire organization to that. And it might mean pulling on files and seeing what's there. It might mean asking and going to your accounting firm or whatever have you, because a lot of things has happened over the years that they want to make sure everything is in place. on page 8, they talk about the, which is another thing, because it's a commission, it actually, and even though the commissioners is appointed by government, they want to give you the impression that the commission operates independent of any entity, and they themselves can purchase property, get loans, and so they can act like a company in and of themselves. They don't need to have anything else in place, and that's important because they have the borrowing powers, advances, and guarantees of borrowings, interest payments, and all those things. How they funded those things, it's as if they running themselves independently themselves, and you want to make sure they want to make sure that the people who they have involved, that they actually have the expertise in order to do what they need to do. And so we have basically the commission, they're responsible for winding up of companies. If they say it has to be wind up, they will come in and do what they need to do. So the rest of that on 11, one of the things also too, they say, and it's shown in that little box on page 11, the salesperson it's mandatory that they do continuing education. And so they have to provide, when their license is up for renewal, they have to provide information that they've done something, some course related to insurance or whatever have you. And the managers should send with that renewal that we did X, Y, or Z. Definitely AML requirements on an annual basis, but there's some continuing there because the industry changes, and we want to make sure that you didn't come into the industry 20 years ago and you just were selling and being a very good salesperson but not upgrading yourself on an intellectual basis to make sure you're meeting the needs of these new generation of policy owners and policyholders. And so they say that speaks about a continuing education and make sure that there are requirements related to that education. It could be a workshop. It could be, so it doesn't have to be I studied and went to college and did X, Y, Z. It could be a workshop. It could be a seminar. We have the Insurance Institute of the Bahamas who put on things different places. And we also have the Insurance Institute manages the industry's educational component. And they are attached to the Bahamas Insurance Association. So the Insurance Association is the managers and the executives dealing with issues as it relates to insurance. But the commission of the Insurance Institute works very closely with the BIA in that they put on these seminars and so forth to make sure that the practitioners in the industry are kept up to date on what's happening. And so even though they're separate, they actually work together. And there's a coordinator in the Bahamas Insurance Association's office whose job function it is to coordinate all these activities. So when you hear the chairman of that group come out and speak on behalf of the industry, it would have been a representation of all the major insurers, I'm sure for the most part, which would include the general insurers, the life insurers, and the major large agents and brokers. So they usually speak with one voice, having gone through whatever they want to make sure happens in the industry. I think basically we might even have some time to jump into some other stuff because the main thing that I'm concerned about is on this paper here, but it actually goes into a little bit more information in basic sections 1, 2, and 3. Let me just have a quick look at chapter 2, which if we do it, because we got another hour, then we are ahead of ourselves as opposed to not being, or at least started. Because what I see on page 14 kind of captures all of what I've said about an agent, a broker, policy owner, and a sub-agent. Okay? An agent, the main thing there is a body corporate. And that is appointed by an insurer. So, let me just clear this up. So the quicker we finish, the quicker we have more time to not be here and we could probably move some of that stuff up. And you're gonna definitely be tested on what we cover. Yeah. An agent solicits applications for insurance, collects money by way of premiums, and acting in accordance with the relevant agency agreement. So in order for you to be an agent of an insurer, you have to have a contractual agreement between you and that entity. And the agent normally binds the principal. Okay? And it says body corporate. So your Bahamas First is an insurer. Their agent could be Nassau Underwriters. Body corporate. A broker is also a body corporate that acts with complete freedom as to their choice of undertaking. For commission or other compensation, a broker brings together persons seeking insurance or reinsurance product with those who provide insurance or reinsurance. So the broker actually represents the client. As a broker, I take information from you and then I go into the insurance marketplace and see where I can place this business. So I'm supposed to be representing my client. The agent is representing their principal. And I'm selling this product what my principal is asking me to sell in exchange for commission. That's the difference. A broker represents the client. And the agent represents the company, the principal. And if the broker is supposed to do a very good job of doing a comparative analysis between the different insurance companies and make recommendation based on what's in the best interest of their insurer. So to bring it home to you, if my company only sells life insurance and the customer and no investment at all, and the company and the customer says, but I want, so I can only sell what my company offers. I can't make any advice or give any other information because I'm thinking about me being a corporate entity now. The corporate entity is saying, my company only has this product and this is what I'm selling. The broker says, you've come to me and you want to insure whatever. I don't have it because I don't represent any particular insurer. So give me as much information as you can, and I, with my knowledge of insurance, will know whether I should go to Bahamas First, Security in General, or Summit, or whomever. And then I'm coming back to you and saying, having done my due diligence and my search, I'm recommending this one because this has that, and the next one has the next thing, and the next thing, whatever. And then you, the customer, saying, okay, fine, I want to go with it. And then I'm going back to the insurance company. So I'm the broker between the two, as opposed to just representing one entity, which is my insurer. And that's the difference between the two. Whose interests are you really looking out for? You would like to think an agent is looking out for the interests of the customer. You'll only get that when the agent says, you know what, I suggest you go somewhere else because this doesn't really do for you what it's supposed to. That's when the agent is now on the other side of the table. Outside of that, they're selling their company product. And that's all they can sell, that's all they're limited to sell. They can't make a recommendation on somebody else's product or whatever have you. So the policy owner, of course, is the person who owns the policy. Now, in terms of a sub-agent could be a person or an entity, an individual or an entity. So, give an example. We could have a situation where, let's say, we have the insurer here, and they appoint an agency. I can say agency just so I don't want to get it confused. And that agency might be in New Providence, but there's business in Exuma that needs to be covered. This agency then says, I'm going to appoint a sub-agent. So you couldn't be a sub directly. You got to be a sub from an agency. And so that's when you have a sub. This too could be a company or an individual. This got to be a company. And this got to be a company, a corporate body. Now, under this agency, they could have salespersons. And that's your individual, Or the insurer could have salespersons. Like your family guardian, your Colina. They have individual agents working with them. The life insurance companies are allowed to have individuals working directly with them. The general insurance company says you have to sell through an intermediary. You cannot have a salesperson working in a general insurance company. The life companies can do it, but not the general insurance companies. Any questions on that so far? And on the top of page 2, it's page 14, it says, Section 3, Part 3, Section 24 of the Act prohibits the direct selling of insurance products by an insurance company. The exception to that is life insurance companies, because they have salespersons hired in their organizations. So Bahamas First couldn't go out and solicit business on their own. They have to have a national underwriters or a confidence or whatever have you. And sometimes they say, well, that's the difference between the two agencies. If it's one thing, it should be across the board. But traditionally, the Act speaks to there should be an intermediary between the insurance company and the public. And the life company says there is that intermediary, it's that insurance agent, a salesperson. Let me use the word salesperson so you don't get confused. It's that salesperson. But the argument could be, but that salesperson is hired by the insurer. So they are only carrying out the mandate of that insurer. And what the company has done, what the Commission and the Act has done, because traditionally there were so many people that were hired by the life companies, if they turn that off, then you're going to have a lot of people displaced out of the business. And so they said, okay, for the life insurance companies, we would allow it to happen. You could have a career agent working along with you. And so Colina, the family guardian, the BAF, the BF&M, they all have agents working with them, because the Act actually prohibits the direct selling of insurance business. This section, they say, covers general information that they expect that the salesperson should know, whether they're selling general or long-term insurance. And the Insurance Commission actually gives a person a license under the long-term insurance, life insurance or sales, or other than life. We have few people who actually sell both. But you can, if you, like myself, I started the industry with J.S. Johnson and Company Limited. So I did all the requirements under the general insurance business. And then I switched over to Manulife at the time. And so I maintained my license because I had the qualification to continue that. And then I learned the life side. So every year I get a dual registration and regulation in that time. The problem is you're having to pay for each one separately. So the licensing fee is $100 now. I'm having to pay $200. So in essence, I have a dual license. They want to be satisfied that you would have, I spent 13 years at one and then 18 years at another, or something like that. You had the proper training and experience to make a suggestion on both, especially the general insurance side of it, because the fact that I sell motor insurance don't mean I could do marine. I don't mean I can do public liability or employer's liability. There's so much stuff on the general insurance side. They want to make sure when they give you that license, you can speak generally to all of the kind of policies, a plate glass policy, for instance, or product liability, because like the hotels need product liability insurance. And people go into specialized areas to make sure that they have that background. Now, the general registration for registering as an insurance salesperson in the Bahamas is this. The person has to be 18 years or older. They must have not had any financial concerns, undischarged bankruptcy. They must be of sound mind, who is certified to be, not someone certified to be suffering from any mental illness under the Mental Health Act. There can't be anyone convicted of an offense involving fraud or dishonesty. They could not be persons not sponsored by a registered insurer, broker, agent, or sub-agent. So you cannot say, I want to come and sit the insurance salesperson license myself. No, you got to be sponsored by a company to do that. You cannot be a salesperson without being sponsored by some company. And there should be basic minimum qualifications for a salesperson, usually GCs or an associate or a bachelor's degree. They want to see that certification in place. Before the commission, we had persons who would have been running a store before, and now I want to come in the insurance industry without any qualification of any sort. And I could pass the exam, so that should be sufficient. And it used to be that was to be sufficient, but now, since the commission came on board and whatever have you, because you are advising a more informed consumer. They want to know that you have your basic education in place and up to a certain level. So there's definitely minimum qualifications now. And anyone who does not participate in continuing professional development, they can have their license revoked. They can actually have their license revoked. They have to submit an application to the insurance. They must accompany the fee. They must successfully pass the salesperson's exam. If you take the salesperson's exam and you fail the first time, they allow you to take it a second time within the next month or so. If you fail a second time, you have to sit out for 3 months and then come back in. Some companies take the position, if you fail it the second time, they don't sponsor you anymore. So you have to do something else. The exam itself is basic information, and when you're coming into the industry, the training organization, and one of the things I must say over the years I've been involved with the Insurance Commission, is the training is very high on the agenda. So you find that individual companies have a training department, and someone coming in new has to go through the entire process of understanding products and services in that environment. And so if you do it properly, chances are you will not need to pass it, to take the exam more than once. Because to me it's that simple. But you have to make sure apply yourself in that environment. On page 15, at the bottom of that, a salesperson may only be sponsored by a single insurer. Remember what I said before? And this includes long-term or general insurers and certain class of intermediaries. So you couldn't say, as a salesperson, I'm representing Bahamas First and Family Guardian. You only could be a salesperson attached to one entity. Okay. And if the commission decides that they're not going to give you an opportunity for a license, they should give you something in writing that says why you have a right to request that. And then the identification card is just like a pocket-sized card that you should be carrying with you at all times when you're doing business in the industry. I think I have my card. Let me just double check, because I should have it with me at all times. That is like your business license. Do I have it? I should have it. I don't want to be embarrassed if I don't. Yeah. So that you see what it looks like. Nothing big, really small. But if someone asks you to produce your license, you're supposed to be able to do so on the spot. They're supposed to be able to see the certain things are on this, and every year it should have all of that stuff that's on the top of page 16. The photo of the registered person, the name of the registered person, the commission's registration number. Because when you're making a complaint, sometimes it'd be good to say the ICB number is 3187. Because that's they have it in the system with all of that in there. Name of the sponsoring company, which company, and so sometimes, because I know what happens, the license is good for a year. I went to work with X, and then mid-year I go work with somebody else. And at the time when I go, I'm supposed to take my license back in and let them reissue with a new sponsoring company. But you might find that someone is in the front of you saying they're representing Kalina and the license says family guardian, that should be reported to the ICP because they are not operating under the act in itself. But agents usually say, salesperson usually say, well, I'm good for a year, so I can just go with another person and I have my license. Once you leave your sponsoring company, this becomes null and void. And you should actually take it back into the... On the back of it actually says, this card is the property of the Insurance Commission of the Bahamas and its use is governed by the Insurance Act 2005 and any applicable regulations. This card must be in the possession of the holder at all times when conducting any insurance business with the general public. And this card must be returned to the Commission upon leaving your current sponsor or upon demand. If the card is lost or stolen, the card holder must notify the Commission immediately. But they don't take it as seriously as it says on this card itself. So it'd be good to know the things that is covered under the license itself. And the majority of the salespersons do it right, but there are some that, for whatever reason, don't do it the right way. And sometimes it could be a lot where I don't want to pay another fee. But you don't pay the $100 anymore. I think it's the 10 or 50, might be. It used to be $10. I never had to transfer it to anybody or whatever, and so I'm not sure if it's gone up since a lot of these new acts. And they don't charge VAT. They actually have one straight fee, which is a surprise and that. But they should issue it every year. And if you say my license expires in November and I don't go in till about March, they could charge me a late fee. Because what that is suggesting is I was selling without a license.
So someone who, like for a salesperson, if they don't have a license, they come to sell you insurance, would that insurance be null and void?
Well, no, the insurance is not null and void.
Okay.
Because the insurance you sign up for is between you and the insurance company. Okay. But it's questionable, well, that person has committed an offense, but what you got is not an offense. But if you could, I don't think your general public asks to say, let me see your license.
No.
But you should. You should. Because if you went to the doctor and you couldn't figure out this was one that doctor licensed by whomever, you ask some questions. It's the same seriousness because not only you are seeing them for the first time, you're not going to be there when they deliver what it is you thought you bought. So you want to make sure that your family is protected because they weren't party to the conversation. So I would suggest that you start saying, can I have a copy of your license? Especially if you haven't done business with them in the past. If it's a new person coming to you, they should be expecting you to ask for it. They should be expecting you to ask for it. And if they're conducting business, it's like a shop. You're supposed to have your business license up on the wall. That business license going with them, so they should be able to produce it at any given point. Let me see if it's a safe place to stop without getting too far. Let's do the cancellation of the registration and we stop and pick up our market conduct next week because we're well ahead of where we want to be. Don't forget to bring the policies with you when you come to the sessions. Suspension of the registration. The Act gives the Commission the authority to suspend the registration of any intermediary if it finds it in breach of any of its obligations. The Commission must notify the intermediary in writing of its intention, and the intermediary is then afforded an opportunity to address all outstanding matters. So you've been suspended, and it could be you need to return some money, you could be collect some funds or whatever have you, and giving you a reasonable time to make the adjustments or whatever have you. If they don't, the Commission, having stipulated in its notification letter a specified period by which the intermediary must address all outstanding issues, may choose to extend its deadline if the intermediaries in question can demonstrate sufficient progress. So, for instance, if I needed to get something from some government agency and it's taking longer than I anticipate, then I should go back to the commission and say, okay, instead of coming back on a Thursday, I don't think it's going to be ready until, and the commission has the right to say, okay, that sounds reasonable, so we will allow you to get away with that. If the breach is not remedied within the given period, the commission may choose to cancel the registration. By canceling the registration, the commission has the opportunity to do so if the registration was procured under false or misleading representation. We had way back in the past, it don't happen anymore, where persons falsify certificates. So they were not able to, under the requirements of the act, they were not supposed to be in the industry to begin with. Or they might have falsified a sponsor, saying that I got a letter from this company saying they're sponsoring me, but it was not true or whatever. But that has not been happening recently, I must say. If the intermediary has not been carrying on business in accordance with the sound insurance principles and practices, and sometimes there's rules against salesperson causing the person to cancel the policy and start the policy all over again with another company. Because each time that customer starts over, the new incontestability periods are in place. So you could have had insurance for 15 years, but because you keep moving, it's starting all over and all over again. And on a whole life basis, it's like an example, and I tell agents don't do it, because it's as if you bought your home, you applied for a mortgage, you paid the down payment, and then you start living it for 5 years, and someone tells you, move out of this house and start a new mortgage. You wouldn't do that. The equity that's built up in that house, you want to maintain. So the policy that you took out with that company prior to has equity in it if it's been enforced long enough. So, and usually 3 to 5 years is the time frame. So I could see a need for additional insurance, but not to cancel that and then to take on something else. And then sometimes you might have developed something that makes you uninsurable. So you've canceled that policy, but you can't get insurance. And some agents, or some rogue agents we call them, got to the point where they say, well, okay, let's apply for this one first. And when it's issued, then you go cancel the other one. But you're starting all over again. And all of that information that you've gained over that period of time, you've lost. If you allow the policy to lapse, for instance, we have this incontestability period, which is within the insurance company can contest the coverage if the policy is not longer than 2 years. They could question anything related to that policy. If every time you reinstate, the incontestability period starts all over again. So your 2 years run again, and your 2 years start again, and your 2 years start again. Okay, and all the conditions under the policy start all over again. So we had the suicide clause scenario. It isn't that the companies don't pay in suicide, but you have to have had the policy for 2 years prior to the suicide. Because they figure no one will wait 2 years to kill themselves if they had that intention. But every time you start all over, all the conditions in the policy start all over again. And so you might be toggling on the idea and you end up doing it 6 years down the road with the policy that you just took out. You know, so you're really defeating the purpose, and there's rules and regulations against causing people to cancel policies. And there's really no need to do that, because the average Bahamian is probably insured for 10% of what they could be insured for, if they took into consideration all of the things that they're doing. Because if this policy is for the mortgage company, what happens to the family? You know, there's different things that you can need insurance for. Or you might want to just do some college education, which is separate and apart from the home. So there's really no need to have someone cancel the policy, and I would not recommend it. But some people come to you, man, that agent make me mad. I want, no, hold on. The agent make you mad, but the contract you have in your hand is with you and the insurance company. And you could go in and request a different agent. Cancellation should be the last thing you think about. In my mindset, even in the 40 years I've been in the industry. So, if found guilty of any unreasonable delays in the payment or settlement of any claims against or under any policy signed by or through them, this is the reasons for cancellation. fail to provide the commission with any information that is requested of him within the required time frame, the commission would and can have the right to terminate the policy. So based on, I'm not going to go beyond 3 because I want that to be a midway point for the midterm exam in any event. But you can read it, and when we have times like this, a little extra time, I would want to pick out different parts of a policy, and we can have that discussion so that we are still keeping and maintaining the momentum, but we're not going faster than I would want for a midterm. Okay, but feel free to read as many of these pages as you like in your own spare time. Okay, any questions? The sooner you give me your utmost good faith, that's done. Okay. Make sure I make a note of that. Pen somewhere. You have one person who's doing utmost good faith already. And remind me of your name. Okay, you're Kalisa. Anybody else at this time is ready? Or you'll be emailing me?
Can I take number 3?
Number 3 is what?
Indemnity, I think.
Indemnity? Okay, this is indemnity. Deliveries. Yeah, okay.
Policy on insurable interest.
All of these are easily found on Google. So the two newbies, you could decide and let me know because by the 27th, is it? We definitely will be making those presentations. Okay. Any questions?
Send me out approximate cost.
Approximate cost?
Yeah.
And you are?
I'm Nicolette Bafford.
Nicolette. Okay. Okay, there we are. Utmost good faith. Wait, now we have utmost good faith.
Oh.
Kalisa's doing utmost good faith.
Okay.
What's gone is utmost good faith, indemnity, insurable interest, and proximate cause. So the only ones we have left is subrogation and or contribution.
We can go with the subrogation.
Subrogation. That happens a lot in your industry. Yes, it does. Yes, it does. Okay, then. Unless we have any other questions, we're free to call it a night.